Hey guys, so today is Tuesday, and I want to basically talk you through my today's trading day. I really learned something really new, or basically journaled something really important. And yeah, so let's get to it. Basically, right here you have the daily chart where we start always with our analysis. What you can see right here, we definitely broke out of the price range right here of the daily chart. We are at all-time highs. We have a huge high time frame gap right here, and also today we have a new day opening gap. So before we drop lower to the 50-minute chart, I want to show you regular trading hours, because that's really important to me for my trading approach. So what we can see right here is basically the last new opening ranges from the last 3 days. And as you can see right here, we basically had both times, so yesterday and the day before yesterday, we were trading with a new opening range gap of over 120 handles, which means the gap is larger than 120 handles. Therefore, we are trading in trending conditions, and we want to see price actually trade back to the upper quadrant and then continue with the trend. And today was a bit different. So today we had 108 handles, so we are not in trending conditions. We want to see price trade back to the consequent encroachment of the new opening range gap, and then we are able to eventually follow a market maker buy model. If it's to the upside or to the downside, doesn't matter, but we have to reach consequent encroachment. So because we do that 77% of the time. But so basically I want to show you now the last days, how we basically reacted there to the opening ranges. So basically that's today, and as you can see right here, we basically traded perfectly to the wick right here, and then continued higher, and that's basically exactly where we had our consequent encroachment. So now you can see right here on electronic trading hours, yeah, we definitely traded to consequent encroachment and then traded higher. And for the past days, that wasn't really the case. So yesterday, for example, we had a new opening range gap with over 120 handles, so therefore we are in trading conditions, but we did not reach the upper quadrant of the gap. So why is that? Basically because we formed a market maker buy model. So if we are, for example, in really trending conditions, for trending days, we don't always have to reach the upper quadrant, especially, or basically only if we form a market maker buy model, in this case, within the opening or before the opening. So right here we basically swapped New York open kill zone sell side liquidity, therefore a market maker buy model is in play. And then we did not really had any kind of setup in here, but definitely with the long close macro we swapped sell side liquidity, and then we're able to trade basically higher. I did not take this trade, but I definitely journaled it, and yeah, really played out nicely actually. So yeah, that's basically for yesterday. So but the day before we also had we did not trade back to the upper quadrant of the gap, but in this case it's actually a bit different. So right here it's Friday, so therefore I expect that the objective for the day was obviously met with basically CPI, and therefore we just ranged. So we have to ignore this day actually, but in that case we followed our approach to expect lower prices, because we want to see basically NQ trade back to the upper quadrant, trade back to the sell side liquidity pools down here, but yeah, we were not able to do that because the objective was already met, and we just consolidated because it's a Friday with CPI, and we already basically reached our objective on a daily chart. So basically what I learned is basically the fact that if we have a market maker buy model or market maker sell model which is in play already before the opening, we can basically sometimes ignore the upper quadrant and expect that NQ will trade higher, as we did right here with sweeping the New York open kill zone by sell liquidity, and then we were able to trade higher, even if we did not trade back to the upper quadrant. And so maybe let's talk about today's trading days. So as you can see, we swapped Asia liquidity. We have London lows right here, New York open kill zone. We swapped Asia highs, 8:30 opening, and yeah, I think the rest is obvious. So let's trade back to no, let's go back to the 1 minute chart. Before I want to show you my executions, we also had SMT right here. So actually, we are definitely trading at all-time highs, and but we are not in trending conditions on regular trading hours. So therefore, we expect price to trade back to consequent encroachment. We swapped Asia liquidity, so therefore a market maker buy model is already in play. That's correct, but we are not in trading conditions on regular trading hours. So therefore, we don't expect the price will continue trading higher, even without trading back to quadrants of the new opening range gap. But because we have a gap basically smaller than 120 hands, we want to see first NQ trade back to the consequent encroachment of the new opening range gap. So that's really important to understand, and therefore we also basically formed a ATM model right here. So 9:30 opened, we traded higher, and that's basically a fake out because we are still trading away from the opening range gap. So we are trading away from consequent encroachment. We sweep by the liquidity, and that's really aggressive displacement high with a perfect suspension block, and then we can enter right here after 9:45 and basically target shorts. And always with the ATM model, if we basically always look for New York open kill zone because it's a really important liquidity pool for the AM session, but in that case it is below the high time frame, but way more importantly it is below the consequent encroachment of regular trading hours. Consequent encroachment of regular trading hours is right here. You can see that, as I showed you before, on electronic trading hours. So right here. So that's basically consequent encroachment. Now I will switch back to NQ. Just keep that in mind. And as you can see right here, that's around the level right here. So consequent encroachment is around here. And as you see, we basically swapped the opening liquidity right here. We traded lower. That is definitely a partial. So the setup definitely plays out. But then we formed a really huge bullish SMT with ES. And ES actually took out its low of New York open kill zone. Yeah, so ES took out the low of New York open kill zone. You can see that right here. So ES swept the session liquidity right here, but NQ did not. And therefore, we had really difficult trading conditions. So we just hanged around. And now it was really difficult because for me, I was definitely looking for higher prices because we are at all-time highs on a daily chart. But we did not really trade back all the way to consequent encroachment. And we also did not sweep the session liquidity right here, but that's not the most important point in here. It's more that we did not trade it to consequent encroachment of the new opening range gap, but because I thought, okay, if we have a huge SMT, basically with basically ES traded back to its own consequent encroachment. So if we did not had SMT, we would have had traded basically lower, so therefore I actually regarded the situation right here as we would have traded back to CE. So but yeah, actually SMT is not enough for that, but yeah, we will see in a second if I show you my executions. So therefore we basically traded higher with the SMT and then just hang around. We were stuck within the inversion fair value gap right here, which supported price higher, and also like within the suspension block, which reacted price lower. So, or yeah, basically delivered resistance to price. And so that was basically an unfinished ATM model. And then with just time being in play, we were eventually able to take out the low right here and trade perfectly to consequent encroachment. And then with the London close macro, we traded higher. We got a really nice reaction from it. And then entered time distortion once again. And then we swept this low one more time, only by yeah, a tick, I don't know. We also closed within the fair value gap. That's definitely manipulation. Actually, we don't really want to see that. I think it would have been really nice if we could have already expanded higher with the setup right here, but especially because we only swept the liquidity and also like traded back to consequent encroachment only barely. Sometimes we are basically willingly enough to take out the low at consequent encroachment one more time, and then we were able to trade higher. We basically traded higher, traded back to the suspension block, close above consequent encroachment, and then with time, with the lunch macro, we traded higher. We closed above the inversion fair value gap. We had a fair value gap right here reacting to it. Can show you right here. So that's a fair value gap which supported price higher, and then we had basically engineered buy side liquidity right here. Why? Because that's a equal high and we are near external liquidity, so therefore we expect NQ to take out both of the highs right here, and that is basically what we did. And then I don't know how, but yeah, we just shot higher and buying and selling pressure for sure, because we are traded perfectly to the level minus 1.25. So that's basically the Fibonacci extension tool from the opening range. So that's really perfect, happened also really quick. So that's definitely no buying and selling pressure. I'm just basically making a fun of it, but yeah, was really exciting day. I think I learned a lot. For me, it's really important that I basically have the right regular trading hours, direction, and also like the right approach with it. So for example, if we have like if we are not in trading conditions in regular trading hours, we want to see NQ trade back always, basically always, to consequent encroachment. Why only 77% of the time? Because sometimes we are really bullish, for example, or really bearish, and a market maker model is already in play before the opening or just with the opening, and then we just trade higher, and we basically have a only up day. For example, on Friday it was the same. We just exploded to the upside, and then we can't trade lower. We can't reach consequent encroachment of the today's new opening range gap, but that's basically a exception. So it's really or we rarely basically don't trade back to consequent encroachment. So that's really important. We are stuck within this price range, and until we traded basically back to consequent encroachment, we were able to follow our market maker buy model once again. So and I can also like show you an example of that. So I took some, I think, weeks ago. It's basically this one right here. So right here you have regular trading hours. As you can see, we have consequent encroachment right here. That's a 50-minute chart. And once we traded back to it, we were able to trade higher. And we were definitely, as you can see right here, we had daily liquidity right here. We were in a market maker sell model before, and then we found our low within London, within our London session. Then we were within a market maker buy model. So we definitely were looking for higher prices, but we couldn't really trade higher. So as you can see right here, within the AM session, we traded a lot lower. Here you can see the huge wicks to the downside. That's the 5-minute chart. So right here we have our AM session, And as you can see right here, we basically traded higher. So that's a 1 minute chart with the opening. The opening's right here. We traded a bit lower, traded higher. We have S&T right here. So we took out this low. Therefore, this is actually kind of a valid entry, but I don't really like it because we did not trade it back to consequent encroachment. So therefore, we have also like difficulties to trade higher, really high resistance, many wicks to the downside and to the upside as well. Then we traded higher. We fell short of the daily liquidity right here. As you see, we did not reach it. So that's perfectly engineered buy side liquidity. Why? Because we did not trade back to consequent encroachment, and therefore this level is meant to be reached later on. And right here we traded lower. Here I was rushing into the market, but then basically after we traded back to consequent encroachment, so look to it, L30, still didn't reach consequent encroachment at 11. So right here I was basically just rushed into the market, and with 11:30 we basically did reach it, and then we could expand to the upside and also like reach our daily objective. And that's really important to understand, that we have to reach consequent encroachment most of the times for a really good market maker buy model, I would say. So yeah, now let me show you my executions. Now it gets a bit messy. So as I explained before, right here I was thinking we were already able to trade higher, because if we did not had this S&T right here, we would have already traded back to consequent encroachment and also swapped the New York Open kill zone sell liquidity. But S&T in that case is just not enough. But that's not only regular trading hours is telling us that we should not look for longs, but also like the price action right here, because we are in really compressed price range right here, so many candles within a really tight range. So therefore, in order to break out of consolidation, we have to manipulate, and therefore our manipulation is lower in that case, because we are expecting higher prices. So therefore the longs right here are once again too rushed, or I don't know, are just in the wrong time, because we did not reach consequent encroachment. Then I was basically stopped right here. So I took 1, 2, 3, 4 longs. Then I was kind of expecting the fact that we are not able to trade higher. I took the short and was actually aiming for consequent encroachment, but I got stopped right here. So I did not expect that we would trade down here and then just trade all the way back above the order block right here. But maybe that's just a too tight stop, especially because on the 5-minute chart you can see that we had this huge wick right here, and we just traded to the 9:30 opening price with the 5-minute candle right here, and then we were able to trade lower. But I still really don't like it. It's just the fact that we trade back all the way and take out the high right here. So I would have liked basically the candles without the wick right here. But maybe with a wider stop above the breakaway gap, we could have really had a nice short opportunity to consequent encroachment. That would have been right here, and then I entered long right here, and actually this setup is really valid. Everything is met, and now we are basically able to take our market maker buy model to the upside. But I got stopped right here with the huge candle to the downside with the wick. So that's basically I don't know, I think that's obvious that I will get swept there, because just to have my stop below the low is just too wide for me. So I'm content with that stop. Actually, that's like right now the only one I should have got stopped. But also right here I entered once again and got stopped right here because of basically wrong stop loss management. I was thinking that if we break above the breakaway gap, we would not trade lower, but because of the huge wick to the downside, we are definitely having like a reaction, or not a reaction but a retracement. Therefore I should have expected price to reach a bit lower, and also like below the candle right here, because there's no wick to the downside. But yeah, that's just it. They got stopped, and then, but I was really aware of the fact that we will trade higher. So because especially at that point in time, we basically met every objective we have to reach, and then we just want to see lunch basically spool to the upside. And that's definitely what we did right here. So with lunch, we traded higher. We took out the engineered buy side liquidity right here, also the AM session liquidity, and then really exploded higher. And so that right here happened really quick, so was not really able to take anything off in here, but I basically took off 2 right here and 1 right here. So I just wanted to get out of it because it was really volatile. But as you can see right here, we are actually trading higher. So yeah, really I don't know, stressful day, but I think I learned a lot. So it's just insane how you can basically find a perfect trading approach if you are trading a line with regular trading hours, with the higher time frame, and with your lower time frame. So if these 3 time frames basically are a line you are trading at a really high probability condition. So that was basically the case within lunch. So we are trading a line with higher time frame for daily. So that daily time frame was bullish. We on regular trading hours, we traded already back to consequent encroachment and are now able to follow the market maker buy model to the upside. And on the 1 minute chart, we are also like having a really nice setup. So that's basically how we should trade. And in that case, we were ignoring regular trading hours right here. And yeah, right here, yeah, just got stopped, unfortunately. I think that's basically it. So I also like journaled it, so maybe I can show you. I think it's really important to basically find as many rules as you can in your trading approach, because rules just make your trading more safely. I'm still like only trading with regular trading hours direction only since I don't know, 1 or 2 months, so therefore I don't really have much. But for example, today that's what my journal like looks like, and yeah, just journaled how I want to trade with trending conditions. So on regular trading hours, for example, if we have 120 handles or plus, it is perfect if we can form a market maker model by trading with the opening back to the upper quadrant. And if we can form a market maker model which trades back to the upper quadrant. So either we react from the upper quadrant or we trade a market maker model to the upper quadrant. And sometimes we form the market maker model before the opening. For example, if we sweep Asia, London liquidity. So don't rely always on the 0.25 level on such days. For example, if you have only up days in trending conditions, we don't always have to rely on the upper quadrant, but on days, which I journaled on the left side, on days for if we have like 40 handles on regular trading hours, we do want to see price trade back to consequent encroachment, and then we want to follow a market maker model. So we don't want to follow a market maker model if we did not trade it back to consequent encroachment. There are definitely some days, for example Friday with CPI, where we did not trade it back to consequent encroachment, and also like traded higher and higher all the time. But these are, or the days are really rare, and actually not delivering any kind of really quality setups. So I will just ignore them, and yeah, I think I will don't trade them. But if we are really bullish and a market maker buy model is in play before the opening, and we only do, or we are below 120 handles, sometimes you can look for a long and follow basically the market maker buy model higher. But yeah, I wouldn't recommend it. It's not the perfect approach for me. But yeah, so today we had basically a yeah, also like a new opening range gap less than 120 handles and larger than 40 handles. So therefore we expect price to trade back to consequent encroachment as we did right here, and then we want to see our market maker buy model to the upside, align with the higher time frame, and that's basically what we did. So of course, because it took lots of losses right here, it's still a losing day. But to me, that's not how I basically not how I would consider a profitable day. So definitely, I'm still not a profitable trader. But today I learned a lot. I really learned a lot. So I think it's definitely a really important day. And yeah, we keep on moving. We have to keep on moving. We will improve, and that's how you improve. I would say you have to take losses. You have to journal basically to analyze what you did wrong, and then we will get there. So really interesting day today, but I think that's basically it.